I want to make the case to you that the stock market is a bunch of smoke and mirrors that makes little sense. And all these people and analysts that tell you that they know what's going to happen and buy this and that, you have to take that all with a grain of salt. There's several stocks that are brought up when we talk about the stock market being a popularity contest. Certainly Tesla is one of them. But I want to take a look today at Carvana. This is one of these that we've talked about before, but very happy that I didn't short this. It has negative earnings. And, TD Ameritrade did a great job by buying Thinkorswim because their resources to analyze stuff before then were not great. Let's take a look at Carvana and what we could find if we start to research this on the TD Ameritrade site. So I'm going to go down here to the quote on the bottom. I'm going to select charts for Carvana. Let's go pull up the screen here. And this shows Friday. Okay. Let me take a look at the volume here. All right. If we were to dig down in here a little bit, we could find the average daily volume of 2 million shares. And let's take a look for a second at reports and ratings, okay? All right, so here we have research team. Okay, downgraded Carvana on the 15th. No, it's not even the 15th. Downgraded Carvana on the 15th of last year, August 15th last year. So, basically they haven't rated it in a year, so who cares? Doesn't matter. They told you to reduce it a year ago on August 15th. And since then, stock's up 43%. So terrible idea, terrible rating. You would have totally got killed if you'd followed this one. All right, here we go. Rating since August 9th. One of the worst stocks, these guys say. August 9th. Okay, so since August 9th, if we look at Carvana, okay, here's August 9th right here. So since August 9th, the stock's gone from, hold on. The stock has gone a lot higher, essentially. Since August 9th, the stock is up from 70 to 79. So not a good idea by them either. Totally wrong. These guys sell it since November 2018. They don't like it. Well, I don't know if 3 stars means they don't like it or not. These other guys rated 1 out of 4 since August 2nd. So on August 2nd, they came out with like a complete sell rating for Carvana here, right? August 2nd. So August 2nd, it was 58. Now it's 78. So basically, if you'd followed these research guys, you would have just gotten killed. They're of no use whatsoever. Is that surprising to you? Well, it shouldn't be. And Carvana is not, if you look at the numbers, it's not rated any better than any other stock. And there's no real indication from the numbers that this is going to continue to gap higher. It's very popular with people. And let's go back to this so-called research on TD Ameritrade again. Fundamentals. Analyst reports, valuation. Peer comparison. So you look at some of these other companies, okay? Penske Automotive Group. Penske Automotive Group has $22 billion in total revenue, with a profit margin of 1.98%. This company, Carvana, negative 10% profitability. So PAG has 10 times the total revenue of this company. Let's look at PAG stock. Sounds like a better company to own. Well, PAG, let's see, it's on a slow train lower. Hasn't done anything in the last like year. Let's look at a 3-year chart for PAG. Okay, it seems like the financials much better for this company. It's done nothing. If you bought it in 2017, you'd be lucky if it's at the same price as then. It has done absolutely nothing. However, Carvana, huge rip. Look at this chart. I mean, the last 3 years, it goes from 20 to 70, back to 30. Okay, so tell me that you would have held. Tell me you buy it for 20 and you would have held to 70 and then all the way back to 30 and you would have held so that you could participate where it gets back up to 75 here. And earnings, and I think I shorted it somewhere around 55 here and learned my lesson and just bailed out at 60 here. But the point of this is that the market doesn't make sense. Now, if you think that, wow, this is just a pop and this is going right back down, let's take a look at the volume. See this huge volume spike right after earnings came out. Look at the volume on this day. Okay, that is several times the average daily volume. And if we were to go over here to our think back here for Carvana, and of course it's not working when I try to do it with you, but we'll fix that. I go to my think back for Carvana, and we can see that we had 7.7 million shares traded, like 4 times the average daily volume. So there is definite institutional participation here. A lot of stock trading hands up around the 70 range here. And yeah, it would make sense to sell some if you were long it up here, but there's someone else that's buying it from them. Certainly someone buying it from them. This is not just a rip up to fade here. So this is a big move on huge volume here in Carvana. So monster stock, and it looks like the only play that makes sense if you watch this over time here is to buy this on pullbacks because it is just ripping to the upside. And the question is, how long can a company keep going up with negative earnings? And earnings seem to be getting worse and worse and worse for this thing. However, that's not the entire story, of course. The company is expanding and growing. And, a growth company, a lot of times this is what happens is the company spends money, doesn't, has negative earnings, but they grow and expand all over the country. And all of a sudden, you're sitting on top of a multi-billion-dollar company. But certainly, this just proves that the market's a popularity contest because there's no reason why, if you look at the numbers, this stock should be way higher than other of its peers. If we go back quickly to the peer group here, you can see that other companies in its peer group, and it's going to take me too long to do that, so I'm not going to do that. But other companies in its peer group, you're not getting the excitement of this. This is just a darling of the market, and for whatever reason, fund managers talk to each other and say, "Hey, check out Carvana." And I mean, look, you see this first rip here from 20 to 70, and that should be a clue that somebody likes this, somebody's into this. Second rip here. And, after the second rip, you have to be very bold to go ahead and say, I'm going to short this. Now, this could fall apart. It really depends on if they are able to continue to expand nationwide and that their concept of car sales really catches on and is like the new thing. Then that could justify these prices. But this it's an interesting stock. When we talk about the market's at the top here and the bull market is almost over, you look at names like this and it really doesn't seem that way. But this kind of stock shows you that the market really doesn't make a whole lot of sense when looking at the numbers and stuff, and that you need to get away from trading based on the fundamentals of a company, or at least you need to have in the back of your mind, look, the stock market does not act rationally and is not truly based on just fundamentals of a company. And it's great watching research reports from analysts and stuff like that, but you got to realize that they are full of it, these guys. And a lot of these research reports make no sense. Tesla's been another one where, they've had bad earnings, but they've got this great story attached to it, which has really fueled the stock. It's the same thing with Carvana, I believe. Beyond Meat, we pretty much was established by everybody that this thing should not be worth what it was worth way up there at the 240 range. And it's pulled back a bit, but it probably can still make the case that it's not, that it doesn't have something that's so unique that competitors aren't going to copy it immediately. And, when we talk about something like, what's the story of the company? What are they making? And how will that fit into the market? When we talk about stuff like that, that's called fundamental analysis. And it is important if you're looking to trade, if you're looking to be an investor in stocks. Of course, fundamental analysis is important. But as an options trader or a volatility trader, it is somewhat less important. But, some people would say, well, fundamental analysis is definitely much more important than technical analysis. Technical analysis being looking at a chart and saying, okay, well, what are the patterns of this chart? Trying to predict by looking at the past of what a stock has done, what will happen in the future. And I would submit to you with Carvana, throw that out the window. Because there's no way if you look back here to, February of 2019, February of 2019 would be right like here on the chart. There's no way that you could say, oh, well, due to technical analysis, we're definitely going to rip back to 75 pretty soon. There's no way you could have predicted that at all. And, when we talk about these earnings plays, the calendar spread, well, we would have made money in that TTD, right? Because it didn't end up moving on earnings very much. Earnings was here, and it ended up around the same place. However, Carvana buying any sort of selling a straddle into earnings, you would have gotten just annihilated. Look at this, $58. Okay, it goes up $20. You would have gotten annihilated. Let's see if we can look at. I'm not very good at this, but let's see if we can look back at the think back here for Carvana to earnings. And look at some of these prices here. So this is the day before earnings. So let's take a look at the August straddle before earnings. Okay, so stock was 57. So the 60 straddle was worth somewhere around $10, right? $6 on the call on the put and $4 on the call. Straddle's worth $10. The thing gaps 20, right? So if you're short straddles in this, you get absolutely annihilated. There's no way you survive. However, if you'd bought some calls, you would have done great. But who is to know that this thing is going to rip like that? Let's take a look right before earnings. See if we can do this on the think back too. It's not going to give us time and sales that day. But yeah, straddle was $10, right? So 60 straddles $10 here. Right, it gaps. You're outside that straddle almost immediately. It tries to come back down a little bit, but you're outside that straddle almost immediately, and you're crushed on this if you sold premium in this one. And it's a little bit tempting to sell premium in this thing because it's moving around. And let's take a look at volatility here. Volatility is in the 60s. Farther out, this is after earnings. Volatility is in the 60s for a $78 stock, which is relatively high, but seemingly justified in this one, the volatility level. And I'm certainly not one I've tried to play this on the edge a little bit, but, wow, unbelievable. Unbelievable moving Carvana here. And evidence that the stock market is not, going way lower at the moment. If this is a recession, nobody told Carvana about it. That's for sure. You might have your own examples of irrationality in the stock market. They're all over the place, I guarantee, but this is certainly a big one. Thanks for watching. We'll see you next.